Okay, so let's go and have a look at how this exactly traded, and we'll talk about a few different things that you do need to be realizing when trading central bank announcements. Now, first thing you want to be considering is the liquidity. Usually, when we're looking at the bund, 400 lots is around about the expected size on the bid and offer, meaning you could sell 400 at 161.05 and that would be fine, you would get them all. However, you can see above that it is much thinner. We're seeing a lot less size, therefore it means that you're going to struggle to get your fills away if you're trying to do any kind of decent amount of size. So that's the first thing to know, and this will happen consistently whenever you have any kind of pre-planned announcement, as is the case here. So that's the first thing to be thinking about. What we'll see now is exactly the beginning of the move and how we managed to get in on this. So I'll just get it playing and you'll see the announcement come up. Now the announcement comes up with 60 billion is the cut in the stimulus, and the extension is actually for 9 months, not 6 months. So we'll see that coming up as the move begins. Now, what you saw there is you saw the initial price light up at 08. So that was the first fill. Then further fills reduced this average price down. And what actually happened is managed to sell 08, just get rid of this little bit of writing, 08, 00, and then the majority of trade was down here at 96, 97. Because of the fact that it was so thin, you needed the market to slow a little bit so that you could actually sell some more into this market. So that's where the majority of fills got to. Now remember, on the move down, what were those levels we were talking about? We were talking about 160.92, 160.72, and then 160.54. So straight away you can see that we're straight through 92s. That was the first area. Now being as we only moved 20 ticks, that was pretty much expected, particularly as this news was definitely an outlier piece of news. It was not expected. As the sources had said, there was going to be no talk of tapering. So this was deemed by the market as a taper. We'll now go on and have a quick look. And like I said, remember those 60.92s, 60.72 I should say, and also 60.54 and how the market reacts around those areas. So down to 80s, 75 you get a quick bounce back up, and again a quick bounce back up. Now through 72s and you see the speed pick up, and where does it stop? Straight down towards 50s. Second time we're through 50s and you can see just how thin it is. We've got gaps now, very little in the market, therefore meaning that you really are going to struggle to get any more size in. But what you do have, and this is rather helpful if you are short, are large pieces of size chasing the market lower. What this means is if you're short and you want to get out, you could quite easily buy those 46s, getting you out of your position. So keep your eyes on where the size comes in and also what levels you're now breaking through. Remember, we're through 72, we're through 54, so half the position's gone. Initially we started off with 100 lots, we're now down towards 50 and we're through 52s, 54 area. This now gives you a chance to actually try and hold on a little bit, and also think about the size of previous moves that we've seen. Somewhere in the region of around about 80 ticks is quite a large move for the bund. So we're already approaching the sort of 60-70 area. How much further can we go? And then, as I'll show you in a moment, a little bit of a telltale sign that perhaps the initial move at least has potentially ended. So we'll follow this on. We're now trading down at 40s, 35s, 30s, 27s. Now we're getting another flip back up. Now as we go through 25s, you see the speed really pick up through 20s, and then we flash down a full 25 ticks there. We drop from 20s pretty much all the way to 90s, so down to 95, 90 area, pretty much all in one go. This has clearly been the biggest one instance move that we've seen. That for me is often a pretty big clue that that could be the end of the move, particularly as we've now done over 110 ticks to the downside, which is a larger than perhaps expected, or at least for the first part of the move. So this is a pretty good clue that you might want to start getting out of position down here, covering some of your position. Next up, what you've then got to start thinking about is what the market's going to do afterwards. And this, if you're not in on that first move, does provide you with further trades. What you need to be looking at is where the market bounces to, where it then starts to hold, and you'll notice this in smaller ranges. That way you can actually start distributing orders around and taking advantage of perhaps a 10 tick range. Now if you can keep taking that 10 tick range, you get a little bit more money out of the market on your initial trade if you're in on that, but also it gives you an opportunity even if you didn't get in on the initial trade. And this is often the case, particularly on these more sort of binary, very clear-cut trades, that often that first move is quite a difficult one to get in on. So the second part of the trade can actually be just as important as that first part where you jump in on that first initial piece of information. Now before we continue, we'll just have a little look at the euro. Now what you'll notice is the Bund, after that very quick drop down for 30 ticks down towards 159.90s, the euro is still sitting at its highs up around 108.75 area. Now this could potentially be telling you something. As would be expected, in a situation whereby stimulus has been reduced, the euro has risen, the bunds have fallen. This is because of the fact that the reduction in stimulus is effectively creating higher rates, hence why you're seeing bunds sell off, there's less demand for bunds, and yield wise that creates a higher yield. Equally, that then creates a demand for euro, hence why we're seeing the euro strength against the dollar in this instance. So keep your eyes on the euro as well. The euro can often give you a hand in assessing how much more is in the move or how much less is in the move. And so what we'll see as we continue onwards is the bund continues to bounce, and now the euro is starting to pull back. Bund's back above the area where you got that final flush out, so back above these 20s, and the euro is now starting to come back as well. So now, if you've not been in on this move, you're now trying to assess where the market's stopping at, where it's actually sort of reached up to and is pulling back to. And we just saw it up towards 44 area, and now it's started to come back down to those 20s. So remember, those 20s very important. You're seeing a little bounce again from the area, and being as it's post an event, the markets are still very thin. You've got to be very aware of areas as opposed to specific prices. So you're looking around about 20s. You're also looking in the low 40s as an area. So you have to adjust the way you trade a little bit. If you're looking for specific prices, you're likely to struggle. Whereas if you're looking for an area, say perhaps around these 42, 45 area, that's where you can start looking to get in. Now remember, we had that level up around 52, 54 as well, so that's offering you a little bit of resistance. Once again, we start to come off from the low 40s, and then it's a case of note where we then start to fall to. Back down to 30s, and the euro at this point, note how far down we've gone. We're now trading at 108.13s. So the euro is going the total opposite direction now. Come back off 60 ticks, and this is perhaps giving a little bit of strength to the bund, hence why we're now bouncing from around about the 30 area, not from the 20s. So if you have sold these 40s, 45s, you can see that we're struggling at 30. You can now start thinking, right, I need to be getting out at 30, not looking for the 20s because they don't seem to be coming. So again, we trade up into the low 40s, the low to mid 40s even, and we start to come off. But you can see the market is now struggling. Traded to 40 and we consistently seem to be holding 40. This is perhaps again another clue. There is a bit of strength coming into the market here. Quick drop down. So we're back down to those 30s. In another area, perhaps now start considering getting some of your trade off. The fact that we've been up to 40s and we consistently hold in 30s gives you a little bit of a after the event range that you can start trading within. So there's some of the things you really need to be thinking about. It's not just the trying to get in on that very first move. That gives you the biggest opportunity, of course, but it also gives you the hardest opportunity in terms of speed. You've got to have it very well visualized exactly what you're going to do in that situation. If you've got that, then of course it does make that easier, and you can see how quick we managed to get in. The market started trading around 161.13. We were all in 100 lots by 160.97. So that was still a 16 tick move to get in. However, we got all in, and then you can start taking off as you start hitting those levels to the downside. It's then a case afterwards of where you're going to trade around, what areas you're going to be looking for, and you can see this in every market. Each market will flow between certain areas, and as I say, think about it in terms of areas. Specific prices are less likely to trade exactly to them. So if you were selling 42, you see it push through, so you perhaps have to have a slightly wider stop. So these are the things that you need to be considering when you're trading central bank events. It's what the initial move does, followed by where the trading opportunities are afterwards. It's not a case of just stopping if you don't get in on the initial move. And then we do see further trade afterwards, again back down towards those low 30s, and we start to struggle. We continue to struggle in those same areas. This is perhaps a point now where, unless you're short in the mid 40s, using this 700 as a bit of protection so you can have your stops above, then you can start thinking, right, this really is now struggling to get into those low 30s. You see it trades up again to 45. 700 got a lot of the order that they wanted, and now we're seeing it struggle to come back off again. So this is an area where I'd be considering getting out of the majority of my trade, so as not to run the risk that if we start moving through 45, are you going to see a quick move up? And that's just what we get up towards those 54s, 52 areas. So that's the next area of resistance that you're looking for. And then it's a case of, do we see a reaction from here? So we've now been up to 54, 55 area. Have we established a new range? So between those 54s, 55s, and perhaps we'd be looking down towards 45s. You see it flash down there, back down to 45. So we've pushed up and hit the most significant level that we've got around those 54s. And now we're back. And you'll notice consistently we've actually started moving up. So 20s held, 30s held, and now it seems that 40s are holding. So you're seeing some strength coming into this market. And you now, a moment ago, had 1,000 lot as well chasing the market higher. So if we can get through 55s, can we then start continuing on further? No, we hold those 55s once again. So there's now perhaps another look down towards those 40s. So that's how you want to be considering it after the event. Consider each small range, and it is a case that you are likely to take a few losses and a few winners quite quickly in these areas. But once you establish that range, that gives you the opportunity to trade around the range as opposed to just sitting out if you're not in on the main move. So that's how we moved on that ECB in December. That preparation really did get you there. You had the trade lined up. As soon as the information came out, you knew exactly what you wanted to do with it. Sell the bunds. If you wanted to as well, you could buy the euro, or if the euro is the market you were going to trade, you could be buying the euro, selling the bunds, and then you're looking for those levels to the downside. And then secondly, what happens afterwards in terms of giving you opportunities to just scalp in smaller ranges. Let the market show you where it wants to trade, and then scalp those smaller ranges.